Hi and welcome to this video on the topic of fundamental analysis. Fundamental analysis is a method of evaluating an asset by analyzing its underlying economic and financial factors. It is commonly used in the stock market to determine the intrinsic value of a company's stock. In this video, we will explore the most important aspects of fundamental analysis and how it can be used to make investment decisions. What is fundamental analysis? Fundamental analysis is basically a method of determining a stock's real or fair market value. It involves examining various financial and economic data to determine the underlying value of a company's stock. This includes analyzing the company's financial statements, such as the income statement, balance sheet, and cash flow statement. It also involves looking at macroeconomic factors, such as interest rates, inflation, and economic growth. The goal of fundamental value is to search for stocks trading either below or above the current market price. If today's market price is higher than the real value, it is overvalued and a short or sell recommendation can be given. If the current market price is below the real value, it is a buy signal. Why is fundamental analysis important? Fundamental analysis is important because it provides a more complete picture of a company's financial health and future prospects. By examining a company's financial statements and other relevant data, investors can better understand the company's profitability, debt levels, and growth potential. This information can help investors make more informed investment decisions and identify opportunities for long-term growth of a company, in addition to higher returns. How to conduct fundamental analysis? There are several steps involved in conducting fundamental analysis. The first step is to gather the relevant financial and economic data for the company being analyzed. This includes the company's financial statements, annual reports, and other relevant data sources. The next step is to analyze this data to identify trends and patterns. Investors may look at a company's revenue growth over time to determine if it is a profitable and growing business. It's important to look at the company's return on invested capital and its change over time, as it is a key number in determining its profitability. They may also look at the company's debt levels and cash flow to determine its financial health, if it is decreasing or increasing. Another important aspect of fundamental analysis is to compare the company being analyzed to its competitors and industry peers. This can help investors determine if the company is performing well relative to its peers and if there are any competitive advantages or disadvantages. Factors to consider in fundamental analysis. There are several factors that investors should consider when conducting fundamental analysis. These include: Number 1. Revenue, return on invested capital, and earnings growth. Investors should look for companies with consistent revenue and earnings growth over time. This indicates that the company is profitable and has a sustainable business model. Number 2. Profit margins. Profit margins indicate the company's ability to generate profits from its sales. Higher profit margins are generally better and indicate that the company is able to generate more profit from its revenue. Number 3. Debt levels. Investors should look at the company's debt levels to determine its financial health. Companies with high levels of debt may be at risk of bankruptcy or default. Although high levels of debt means higher risk, debt levels can vary a lot, depending on the industry. That is why it is important to find average levels of debt for the industry your company is operating in. Number 4. Valuation metrics. Valuation metrics such as the price-to-earnings ratio and price-to-sales ratio can help investors determine if a company's stock is undervalued or overvalued. Also, the price-to-book ratio and return on invested capital improvements. Number 5. Industry trends. Investors should consider the broader industry trends and market conditions when analyzing a company. If the industry is experiencing a downturn, it may not be the best time to invest in a particular company within that industry. Also, make notice if the industry is growing, maturing, or even decreasing in size. For a more advanced or extended analysis of a company, you could use valuation methods such as the dividend discount model or discounted cash flow method, which we will cover in another video. For industry and competition analysis, We will cover videos for Porter's 5 forces, pest analysis, SWOT, and so forth. Conclusion: fundamental analysis is an important tool for investors looking to make informed investment decisions. By analyzing a company's financial statements, industry trends, and other relevant data, investors can gain a better understanding of the company's financial health and growth potential. This can help them identify opportunities for long-term growth and make more informed investment decisions. Thanks for watching.